Oil prices surged by nearly 20% after two attacks on Saudi Arabian's facility on Saturday knocked out more than 5% of the world's supply. We have details in this report.
Oil prices rose close to quarter on Monday as investors reacted to a weekend attack on one of Saudi Arabia's most important oil facilities that could cripple petroleum product exports for days or even weeks. Experts say that a severe shock to energy market and the world economy would be unlikely. Brent crude, the international benchmark used by oil traders, jumped to $71.95 a barrel at one point. It is a situation the Nigerian Independent Petroleum Company is monitoring.
The cost of product is directly proportional to the price of crude. So I would say if a pricing model is introduced which can take care of the upswings and downswings, it will be that much good for the country, because that way we would entail less subsidy burdens. That way we would entail fair margins on the investments that companies are making, and that way the business can keep on running and the supply system can be maintained to the optimal levels.
Saudi Arabia produces about 10% of the world's supplies, and many say this disruption could slash the country's daily oil exports by 7.4 million barrels. As at today, the price of Brent crude is about 9% at $65.76 a barrel, while West Texas Intermediate is 8.5% higher at $59.54 a barrel, after rising as much as 15% earlier.
Investment can only happen if returns are there. Currently the returns are not there, and we need to see that the parities are restored by the various stakeholders. They need to take up very proactive steps in the very immediate future, otherwise things would not be looking up for sure.
Analysts say this development could further increase the price of crude as much as $75 per barrel, but warn that oil producing nations need to be more creative and apply caution.